if someone lets it, they will want it back someday. That is the thing that I want you to hold in your mind as you continue to watch this video. If someone lends it, they will want it back. And you can easily tell what I want us to discuss in this particular video. We are using to discuss more of savings in this channel. But in this video, I think it is important we discuss something else that is quite crucial when it comes to personal finance, which is debts, which is debt or loans. And that's why we are saying, if someone lends it, they will want it back plus. So in this video, I want us to discuss debt management. Debt management. Now, I don't want us to have the conversation of good debts, bad debts, because it can take a whole century for us trying to agree whether loans are good. Do you have good loans? Do you have bad debts? I don't want us to go that direction. Now, I'm assuming that we are already in debt, whether good or bad. The key thing is that debts have to be paid. Dawa ya deni ni kulipa. So either today or tomorrow or later in life, maybe it will catch up with you. So the best thing that you can do is get to pay, because the more you stay with it, the more it becomes a burden. So I don't want us to have a conversation of whether debts are good or bad, but sisi wote tunajua dawa ya deni ni kulipa. So I'm assuming that we already have some debts that we owe. So I want us to discuss about some debt management strategies that you can try to use if you are already in debts, and maybe this can assist you to get out of the debts. So I have some steps around 9 of them. So we go seeing each of them, and maybe at the end of the video you'll get to get something that can inspire you to even start paying your debt. And number one step that you need to do if you are in debt is acknowledge your debts. So acknowledging your debts means that you need to know the people that you owe. Like have a list of the people that you owe and the amount that you owe them. So you know that you owe ABC 10,000, 10K. You have a bank loan, so you owe the bank 500,000. You owe XYZ Circle 100,000. You owe your friend John 1,000. You owe your sister 500. So at least acknowledge that you have some debts, identify them. Don't let it be like unaona simu ya mtu anakupigia, and that's when you remember that you have you owe them, you have their debt. So the first thing that you should know is get to acknowledge your debts, and if possible, write them down, all of them, and the amount that you owe them. At least you will even have a picture of how much you are required to pay, and therefore you can start thinking of how you can pay them. Because if you don't know all your debts, you don't have even a rough figure of how much you are supposed to pay, and so you cannot even try having strategies of how you will be able to pay them. So number one thing is acknowledging your debts. So number two thing is determining the cost of each debt. So no debt has no cost, and majority of the debts come comes in terms of interest. So you should know how much each of the loan is costing you in terms of interest. And we have left a very common type of loan that is very expensive. That is the mobile loans. We also have Shylocks, who also charge crazy interest rates. So that is it. Get to know how much you are paying for each of the loans. So maybe this one you are paying 15%, for the bank 15%, for the SACCO maybe 12%, for the mobile loans, the interest rates, they will tell you that it is 5% per month, but if you get to annualize that rate, you get that it is 60% per annum. So mobile loans are one of the most expensive loans, but majority of us do not sit down to do that math and get to understand how expensive they are. Then Shylocks maybe 50% because they are also crazy. Then I have left these two. I have left the loan that you owe to your friend John, and the loan you owe to your sister. Maybe you might sit and think that these two loans do not have cost, simply because they don't have interest rate. Maybe your friend John gave you 1,000, and they expect back just 1,000 bob from you. Your sister gave you 500, and they will expect 500 back from you. So the thing is that even if they don't have financial cost, this 1,000, its most probable cost is amazed friendship. Amazed friendship. So that is the cost of the loan that you owe to your friends. Amazed friendship. Then also the same with your sister. The cost of this loan is amazed relationship. So they don't have financial cost, that is in terms of interest rates, but they will resort to messed friendships, they will resort to messed relationships, those debts that you owe to your work colleagues, they will make the work environment toxic juu utakuwa umekosana na kila mtu juu uko na deni yake. Those debts that you owe to your church colleagues zitafanya hata uache kwenda kanisa. So even if the cost implication is not in terms of interest rate, have it at the back of your mind that there is no loan that does not have an implication. There is no loan that does not have a cost. So usipuze hizo loans zenye hazina interest zenye unao mabeshte wako, relatives wako, they will have an implication that is even bigger than the financial cost. So that is determining the cost of each of the loans that you owe. Number 3 is pay the most important debt first. Or you can even start with paying the most expensive debt first. So number 2 step number 2 was determining the cost, and we did that so that we can be able to determine which loan do you get to pay first. So given a chance, suppose you have some few loans and you get to get some money somewhere. So you should try by paying the most expensive loan. Number 1, you can start by paying the most expensive debt. That is the debt with the highest interest rate. That is the debt with the highest financial implication. So the other thing you can use is to pay the most important loan. Important loan. Maybe an example of a very important debt. It's rent. Maybe you have rent that is due for 2 months, and you know for sure that any moment you can be thrown out of the house. So that is a debt that you should consider paying faster, because even if it is not so expensive, it is so important. So the thing is that have a priority list, so that you can determine what to pay first, what to pay next, etc., etc. And we go to number 4, which is debt consolidation. So when we talk about debt consolidating, we say that this is the pool of debts that you have. You owe your friend, you owe your circle, you owe your bank, you owe your parents, you owe your relatives, you owe a Shylock, such. You owe microfinance. So instead of having so many small debts, maybe if you do a consolidation of your loan, the amount that you owe people, it's coming maybe to 500,000. So instead of owing different people 500,000, what about you take one loan from a circle and pay the different people? Then you'll be left with one big loan to deal with, which is likely to be more easier than having to deal with so many people together. So it is one of the factors that you can get to consider. If you get to learn, you will get to discover that banks even do something that we call buy-off. Suppose you owe Bank ABC a loan of 500k, and maybe it is becoming almost possible for you to pay. So you go to Bank BCD, and they will lend you maybe 600,000, but 500,000 will be sent to Bank ABC, so that you can first clear with Bank ABC, then you remain sorting yourself with Bank BCD. You know, there's maybe ABC, it is around that you are already defaulting, and maybe the interest rates were high, maybe the repayments per month were high, but when negotiating with Bank BCD, you have a loan that is maybe more friendly to your pocket. Maybe the amounts will be manageable per month. So that is what we call debt consolidation. Then number 5 is restructuring, or you can negotiate. You can get to negotiate. Negotiate your debts, especially with the formal institutions, that is banks, circles. Maybe you had agreed that you'll be paying 30,000 per month for the next 5 years, but your business is not moving as you expected. You can go and negotiate with your bank and agree that instead of paying 30,000 for 5 years, you can pay 20,000 per month, then extend the term to 7 years. So that is what we call debt restructuring. So instead of falling into default, you can go and negotiate with your creditors, and maybe you can agree on amounts that you'll be able to pay every month, and maybe extend the payment periods. So that is also another factor that you can consider. Then number 6 strategy that you can try when dealing with debts. Number 6 strategy that you can try when dealing with debt is avoiding unnecessary expenses. So we all know that there are expenses that are not necessary. So you see, it does not mean that now that you owe the bank, you don't pay your rent, you'll be evicted. It does not mean that now that you owe your bank, you should not buy food for your children. It won't make any sense, because those are things that are for necessity. But you can consider things that we can refer to as luxury, things that you don't need for survival. You don't have to eat pizza every weekend, and you owe someone. In fact, I saw someone saying that wakikuona ukipiga sherehe na uko na deni yao, it sounds like it is an insult to them. And in some way I agree with that. So at this point is where you avoid unnecessary expenses. Those expenses that are not compulsory. You cannot be having a loan that you are not able to service, and you are going for sherehe kila weekend, kila wakati tunakuona huko kwa road trip. These things are unnecessary. So at this point, be a person on a mission. Have a mission and commit to it. You have some debts that you need to clear. You are a man on a mission. So cut all the unnecessary expenses so that you can divert the fact that you could have used in kupiga hizo sherehe, going for those road trips. You channel that money towards debt payment. And it will make the journey of paying off your debts maybe a bit faster. So it comes to a time when you have to get to in a mission, and you have to make some sacrifice. That number 6 is one of the sacrifices that you need to pay when dealing with debts. Like, act broke. Accept the situation as it is for now. I'm in debt. I'm in a mission of clearing all my debts. So I need to avoid all the unnecessary expenses. So act as if we are broke. It is not permanent. You'll be out of your debts, and you'll be able to go back to your lifestyle that you need. But have a mission and clear your debts first. Then number 7 strategy is avoiding savings. I know it sounds controversial, but let's get things clear here. Avoiding savings is a way of dealing with debt. And this is what I mean. So, when I mean you avoid savings when you have a debt. You find that the interest that you get from your savings, I'm assuming that your savings from avenues that give you interest. So the interest that you get from savings. So interest from savings. This is income. Then interest that you pay for loans. These are expenses. And with the way the system is set, it is very hard for the interest that you are earning from savings to be higher than the interest that you are paying for a loan. So if you do this maths, ultimately you have a negative value when you get the net interest from interest that you are getting from savings, and the interest that you are paying for the loans. We'll get a negative value, because let's assume you have a loan of 100,000 at 15% per annum. I just want to take a rough figure. That is 15,000. And you have some savings. This is loan, and these are the savings. And you have some savings of 100,000 in an avenue that gives you a 10%. This is 15%, and this is 10%. That give you a 10% per annum. So that is 10,000. So it does not make any sense for you to pay, for you to get an interest of 10,000 from your savings, then uh, pay an interest of 15,000 for a loan that you are servicing. It makes sense for you to take this 100,000 and pay your loan first, so that you stop paying excess interest, because we have seen that if we get to do this maths, we get a negative net interest. So when I mean avoid savings, I mean that the money that you could have saved, direct that money to paying your debt, because there is no sense of you earning a small interest on your savings and you are paying so much interest on your loans. So I mean avoid savings by channeling that money that you could have saved towards paying your loan. I hope it's clear. Then strategy number 8 that you can use, it is automating your payments. We say that kukopa harusi, kulipa matanga. So I don't know why we are so good when asking for debt, but it becomes a burden when it's time to pay. So one of the things that you can do when you are struggling with paying debts, it's automating your payments. Suppose you are employed. You see, there are those loans that will be deducted automatically from your pay slip, and that's why it's easy to pay for those loans that are deducted from your pay slip, because the only way that you can be unable to pay for such loans is when you are no longer working with the company. So there is no salary that is coming in to be deducted. But those loans that we have to take out money and go and pay voluntarily, that is the loan that you borrowed from your friend, that loan that you borrowed from your relative. It becomes so hard to pay, and one of the things that you can try doing is automating those repayments. Like you owe your friend, you have borrowed your friend 5,000 this month, and you promise them that the next month immediately you get paid, you will pay them. Just go to your systems, maybe even M-Pesa. I think even M-Pesa app nowadays has what we call scheduled payments. You can go and schedule a payment on the date that you agree that you have to pay that date. You have agreed that on the 20th of next month, I will pay you your 5,000. Go to your M-Pesa, set a scheduled payment that M-Pesa will automatically deduct 5,000 from your M-Pesa and credit that person that you promised that you will pay them 5,000. If you have a circle loan and you get paid through a bank account, go and place a standing order that the day you are paid, 5,000 should be deducted from your bank account and directed to your circle loan payment. So that is what we mean by automating payments, because sometimes the moment we hold the money that we are expecting, then it becomes so hard to let go, and that's why we find ourselves getting into debts and even defaulting. Then of course number 8, number 9, it is avoiding more debts. We say that if you find yourself in a hole, the best thing that you can do first is stop digging. So you are already in debt. The best thing that you can do is first stop taking more debts. So once you have struggled through all the strategies trying to pay your debts, you should have learned a lesson of how hard it is, and try and avoid all debts by any cost. So the last strategy is avoiding more debts, so that you don't go from step number 1 to step number 8, and after you have paid your debt, you take another debt, so you'll have to go again to step number 1. So after you are done with paying your debts, avoid more debts, and it is after paying debts that you can now be able to start thinking of savings, creating an emergency fund that will assist you not to take more loans. So the final step is avoiding more loans. So those are some of the strategy that you can use when it comes to debt management. So if you are in debt, you can try and apply them, and if you are not in debt, continue avoiding debt by all costs. Don't borrow unless you must, but even then, don't borrow.